It might be useful to have some of those people back on the boards of nationalised banks. Yes, they'll have to be nationalised, because AIB needs 10 billion, Bank of Ireland 6.5, and EBS 0.5 billion. Actually, it's 0.8. Mr. Elderfield pointed that out to me for other reasons. But I'm just talking about simple, correct analysis of what their problem is. And in the case of Anglo-Irish Bank and Irish Nationwide Building Society, in broad brush terms, Anglo has an asset side to its balance sheet of 72 billion, mainly loans. There's about 6 or 7 billion in financial assets that they can recover probably near to 100%. But they've a loan book of at least 65, 68 billion that is, I won't use Mr. Levin in the United States word, but it's pretty bad. And 60% of it probably will never be recovered. So we've got to face the music there and say, there's no point in hemorrhaging and sticky plasters for the next 10 or 15 years. The best recoveries need to be done sooner rather than later. And if only 40% can be recovered, well then that's about 30 billion. And the customers' deposits are about 27 billion. They have to be repaid. They're the women and children off the sinking ship. Then there are bank deposits. And the bank deposits had to come in to replace the huge outflow of customer deposits, notwithstanding that there was a state guarantee. This shows you how big and panicky this problem is. But the bank depositors are a mixture of emergency funds from the ECB, central bank deposits at Anglo, and other interbank deposits who are relying on the umbrella of the state guarantee. And there's also the senior bonds and the subordinated bonds. And in the case of bonds, I haven't the time to go into the senior bond stuff, but all I'm saying is this: bond investors, and even if it's my pension fund and my family's pension funds who have invested in Anglo bonds, those investors take the consequences legally and morally of their own arrogance and their own insistence that deregulated markets were the place to be. They were the most efficient capital markets. They were the ones, they knew best, these investors, how to counterparty regulate and counterparty appraise their target investments. So that's a consequence. They just have to take it. And it would be nonsense for us, our families and our relations, the citizens of this state, to be placing ourselves between the consequences of what these people knew and arrogantly insisted on for the last 12 years and the well-being of our families into the future. Just absurd. And if there's any sort of funny business in the intervening time between the 28th of September 2008 and 28th of September 2010, as I suspect there may be, because it's very hard to know what's going on, the information that has come out has been usually unreliable, usually manipulated. Even the announcement of a week ago by the government that, for instance, the 500 million placing by Bank of Ireland represented a three-level terrific applause it merited, because it benefited shareholders, it benefited the Irish economy's recovery, and it benefited the state. Nonsense. It doesn't. Because it doesn't provide the capital that Bank of Ireland needs, which I said, by any honest measure, is 6.5 billion. And you can go fussing about Basel I, Basel II, and what assets qualify and all the rest. This is a business that has 16 billion of bad loans on its balance sheet, and they're not going to collect them. And they've more bad loans than that 16 billion. So, just because there may have been a little cosmetic profit earned on the buying back of warrants or whatever by Bank of Ireland for the state, or just because you can say the bank now will be promising to increase its lending to SMEs by 3 billion this year and 3 billion the following year. That's nonsense. I don't believe a word. They don't even tell us what they have done right. And now we're asked to believe what they're going to do right. The way to make sure we know what's going to happen is get in there and insist on quarterly reporting on the recoveries business of the banks on the basis of the written down and recapitalised amounts, and their normal business, which AIB boasted only 4 weeks ago, that there's 2.95 billion of operating profits. Well, in part of my submission there, you'll see that if we do buy or take over the banks, the viable ones, at a level of 95%, we'll own 95% of the average maintainable profits of those three entities in the future when they've been rehabilitated, boot camped back, rebooted to proper business, to truthfulness and all those things. And that business will produce 4.5 to 5 billion of profits, which if you multiply at a multiple of 7 times, gives you 32 billion to 35 billion, which more than repays the investment needed to correctly capitalise them now, 17 billion, added to what's already gone in, 10.8, total 27.8. That's how the state gets its money back. That's how the state insists and ensures that the boards of banks are cleaned. That's how business will benefit, because the banks holding the bonds, which will be used to get that recapitalisation achieved, can be used as collateral in the same way as the NAMA bonds at the ECB at a level of, say, 80% of face value to provide a little bit of initial liquidity. And then the other liquidity comes from the recoveries at the truly written down and achievable values of the loans that are bad. And no transfers to NAMA, where the whole thing gets into a swamp and a muddle and costs at least twice what it would cost to do in properly manned and managed and motivated divisions in the banks. Because here's the absurdity: in the banks, the NAMA divisions are actually doing...
Maybe we'd ask some of the members to ask you a few questions, and we'll look at another date as well.
I think so. This is too important.
So maybe we'll give some of the
bottom
others
line
to
is
ask a
this:
few questions.
reverse those loans out of NAMA, get them back into the banks, control the banks for 5 years, get the rehabilitation achieved. It's transparent, it's honest, and nobody that this has been explained to has been able to fault it. Nobody. The department didn't even want to hear it. What sort of a carry-on is going on in the country when our Department of Finance, who are these people, these men and women? They won't discuss, the mechanism for correcting what is essentially the street banking utility of the country to make businesses capable of trading, getting working capital, getting investment capital. It's unbelievable. So the answer is, it's all there in those 3 pages, and I'd entreat you, please, to read them. I'd entreat you and to enter a meaningful discussion. Thank you.
Thank you.